Ladies and gentlemen, good morning and good evening, wherever you are. Today, we have another important topic on a blueprint to identify acquisitions. This topic, and we have very good speaker, and we had similar, some discussion prior to our, podcast recording. And his name is Jeremy Segal, and he is the EVP of Corporate Development in a company called Progress, based out of US. We had very interesting discussion about his name. And I said that, in India, there are people whose second name, instead of Segal, it's Segal. And both are very similar names. So I was just checking with him, do you have some, roots in India or Asia? Because your name is very similar to, many Indians' name. And I said that they are the people who are Punjabi. So they speak Punjabi and they are known as Segal. So without further delay, I would like surely, Jeremy to give introduction about himself, what his role at, Progress. And then we go ahead with some of the questions we have, would like to ask, and we'd like you to share your expertise.
Well, thanks, Dharmendra. It's great to be here today at MergerWare and looking forward to this this relevant topic. So just for a little bit of background, so Jeremy Segal, not to be confused with Jeremy Segal, the professor at Wharton, but he spells it differently. But yeah, so Jeremy Segal. So I've been doing corporate development, M&A work for technology companies in the Boston area for a little over 22 years now. So quite a good history of doing deals in corporate development, first at Akamai Technologies, then at LogMeIn, and most recently at Progress Software, where I've been for the last 2 years. And at Progress Software, we're very focused on helping our customers to provide a suite of solutions that help them to develop, to deploy, and to manage their mission critical applications. And so my role is to really help drive the inorganic side of our growth strategy. And so we are very focused on an M&A strategy that is helping to help Progress get to $1 billion in revenue within the next 4 to 5 years and be one of those billion-dollar software companies, which is an elite company. And so it's been a great first 2 years here, and looking forward to sharing some of the things that we do to really help drive deals here at Progress. And thanks for having me.
Sure. So, we have some of the very interesting questions, and since with the topic itself is, how to identify what should be the blueprint to identify acquisitions. So my question to you is, I know every company had to go through, acquisition in their company lifetime. And my question to you is, how important is to identify a pain points and opportunity tied to any acquisitions?
Yeah, I think it's really important. And it's important for multiple reasons. On the pain point side, it's really important for us as the corporate development team to identify what could be the potential issues, what could be the potential deal breakers in an acquisition early on. And that confirmatory diligence consists of a whole bunch of different types of issues that you can identify. You can identify things that are true deal breakers, like things that you would need to walk away from the deal for. There are also things that you can identify that lead to important negotiation points or commercial issues that are identified in a transaction or as part of diligence. So for us, finding those pain points is really, really important. And on the opportunity side, we are very financial driven when it comes to identifying acquisition targets. If an acquisition target does not hit our financial criteria, we'll walk away from that opportunity. So for us, it's very important as we identify the opportunities as it relates to that financial model to make sure we validate those different opportunities, whether it's operating efficiencies, whether it's an ability to cross-sell, whatever it might be. Because if we're unable to validate that through the diligence process, again, that will bring us back to that conclusion of potentially having to walk away from a deal. So, it's really important for us to identify pain points and identify opportunities in an acquisition. And we're very, very selective, and we're very disciplined from an acquisition standpoint. And we're only doing 1 to 2 acquisitions a year. We're looking at hundreds of opportunities over the course of a year. So that level of discipline, that level of rigor is really important for us. And, having financial criteria established that allow us to quickly determine if something could be a potential acquisition opportunity or not is critical for us. And because Progress plays across that whole develop to deploy to manage high impact applications, we're really playing across the entire software development lifecycle. So it allows us to cast a very wide net. So we're looking at a lot of opportunities, and it's really critical for us to have good parameters from a pain point standpoint, from an opportunity standpoint, so we can really focus and prioritize on what deals we think make most sense and have the greatest likelihood of coming to fruition.
Right. So, you talked about, walking out from the deal, right? So you take a decision of no go of the deal further. So what are the two top criteria, to region for that you think that, the deal have to be called off, or you have come across in your career of 22 years?
Yeah, it's a great question. I would say, it's a few different things. So one is when we're doing our initial diligence, typically we're submitting an indication of interest, and that indication of interest establishes a certain valuation range that we think we can pay based on some preliminary assumptions associated with that target. As we dig in, if we learn through that preliminary diligence period that we're unable to validate that valuation, that is one reason why we would walk away from a deal. Another is, we get into diligence, and for whatever reason, what was represented to us initially isn't really what is truly in the business. And so sometimes there's a disconnect, and people have different perspectives of what is revenue, of what is billings and bookings. And so sometimes what we learn is that the revenue isn't really what they told us the revenue was when we're having preliminary discussions. That's another reason why we would walk away from a transaction. And then the last piece is, just straight up diligence, things that we learn during that diligence process that get us uncomfortable, whether it's, concerns around IP, whether it's concerns around, the seller not necessarily being fully transparent with us, and so breaking some of that trust barrier. And that's really important for us at Progress, building that trust. And if you lose that trust, then that is definitely reason for walking away from a transaction as well.
Yeah, thanks. I think these were the two primary. I was anticipating that this could be two, which will be the in the bigger list. These are the two key. After that,
that list could go on and on too.
Yeah. Okay. So my next question is just related to that. But what is the key? How you identify key focus area of acquisition plan?
Yeah, so I think there are a few, to be honest with you, and it's interesting when we think about our acquisition focus. We break our focus into a few different categories. We evaluate the product and the technology. We evaluate the go-to-market. We evaluate the people and the culture. And that people and culture piece is very important. I know we have some follow-up questions on that later. And then we really dig in on the operations. And within each of those areas, we're really delving in to understand, when it comes to product and technology, sort of really understanding the products, how they're differentiated, how much technical debt is there, how do they do from a market and competitive positioning standpoint, how strong, how agile is the team in developing new solutions and new versions of a product. And then on the go-to-market side, it's really around understanding what is their go-to-market. Is it direct? Is it indirect? Understanding the sales and sales operations structure, understanding the commission structure, understanding marketing and demand gen. And then on the people culture piece, we put a lot of emphasis on this. There's a big focus around talent assessment and cultural assessment that we do. We really want to understand with the target companies, what are the key values and motivational drivers for the target company, for the people there, so that we can make sure we're addressing that, assuming we can get to a transaction. And then on the operations side, it's all around sort of the back office things like legal and IP and finance and tax and IT and cybersecurity, real estate and facilities. So it's understanding all those different pieces. So, there's a whole lot that goes into the focus areas, but we try to break it down into those big four buckets of product and technology, go-to-market, people and culture, which we have as its own bucket, and then operations and sort of the back office pieces.
Right. I think you answered part of my next question, what I was about to ask you. So primarily, how do factors like, your brand image, culture fit, talent pool, there are some more point to it, how they affect the acquisition strategy. So I think you
It,
answer
yeah.
partly, but I think if you can give some more points.
It's really important for us on the brand image piece, and for progress prides itself on being an acquirer of choice. We actually have a landing page on the progress.com website that is dedicated to our corporate development and our commitment to M&A. But as part of being that acquirer of choice, we need to show that we are committed to the people, that we're committed to the customers. And one thing that's fascinating when we talk to target companies and we tell them that we're reinvesting over 20% of revenue back into R&D and innovation, that lights people's eyes up. I mean, they get so excited because we are committed to making sure that we continue to invest in that technology. For perspective, when we acquired Chef a little over 2 years ago, we now have more people in the R&D team for Chef than were in R&D at Chef when we did that acquisition, because we're that committed to the technology, to the customers. And then as it relates to the people, on the culture piece, so in the talent piece, we spend a lot of time really understanding the team. And when we spend time with the executive team, because that's typically the group that's over the wall when we're diligencing a deal, it's really important for us to understand who are the key lieutenants within their organization. Why are they key lieutenants? What drives them? Could they be potential high performers and thrive in a bigger platform? And most of the companies that we're looking at are much smaller. So, coming to a public company with over 2,000 employees is a very different experience. And so we want to really understand who are those key people and how can we lock them in? And for us, it's not just about the monetary aspect of locking in these people. It's what is it that's going to get them excited from a professional development standpoint? Are there opportunities for them to take on bigger roles at Progress? And we've had great success with leaders from these companies that we've acquired, taking on leadership roles and making a bigger mark within Progress. So while the compensation piece is certainly important and making sure we have the retentive packages in place, that other piece of the talent development, the professional development is so important. And as it relates to culture, that's a really great question, and something that, I would say when I first got to Progress, maybe wasn't as big of a focus, but we've put a big emphasis on it since I've gotten here. I put a big emphasis on it when I was at Akamai and when I was at LogMeIn, because you can't underestimate the importance of understanding what is unique about the target company that you're acquiring, what is special about that company that you're acquiring, because you want to be able to retain some of those different pieces, whether it's associated with inclusion and diversity, whether it's associated with like special things like a pizza party once a month or bagel Wednesday or whatever it might be, really understanding what are the things that make that company tick and make them unique. And there are certain acquirers out there that basically say it's our way or the highway. That is not how Progress does acquisitions. We are very, very sensitive to what's important to the target company and what can we retain. It's not to say that we're going to retain everything that they do. And sometimes with smaller companies can do things that as a bigger company we just simply can't do. But we do put a concerted effort around it. Every single functional leader of diligence, when you get to that diligence process, basically has a questionnaire of cultural assessment. That they're all trying to weave in these questions to really understand. And when we're doing our diligence readouts with all the functional leaders, we're hearing about all these different pieces. And our people team is going and formulating what are some of the key things, what are some of the risks, and what are some of the things that we can do to avoid those risks. And that really helps. And I think that has allowed us to really have a good track record from a standpoint of acquisitions. And that success really comes from that commitment to the culture, that commitment to what makes that company special and not losing that.
Right. So I think very valid point, the way you have been, keeping focus on early integration of people in the process, learning from them, what are the best practices they use, retaining them and growing them further, right? Like you gave example of having somebody from the acquired company who is coming and taking up leadership position. Even you have all the retention bonus and all, but that is not enough. That is only one part. The second part is how this person is being positioned in acquired company. like within your
Exactly,
company.
exactly,
Yeah,
exactly. And being able to
yeah,
take on a more significant
right.
role,
Mm,
being able to have a bigger voice.
right.
You know, it's really I've found it to be incredibly exciting to see some of these people who, you know, were second in command, third in command, come in
Yeah,
and take on leadership positions at Progress and thrive.
right. Yeah,
And so that's something that me as a corporate development professional and serial acquirer makes me really proud to sort of
right.
see these star people becoming stars within Progress and thriving here. It's awesome.
Yeah, I think this was one of the best practices in my note. This was one of the important point to not only just compensate them, but identifying the right positioning them for long term, how they are going to build the organization. It's a kind of owning the part of the company, like making it big, maybe
Yeah,
line of
yeah,
business.
exactly,
Yeah,
exactly. You know, and they can feel like they're still, even though they're in a much bigger company, they can
yeah,
still be impactful. They
right.
still have a meaningful role.
Yeah,
And that's really important. We don't want them to just sort of get lost in the shuffle at Progress because, you know, they were working for a 200-person company and now all of a sudden they're working for a 2,500-person company.
right.
And obviously there are different dynamics that come about with a larger organization.
Right. So I think my next question, partially you have already answered. So I was about to ask you about what are the different effective acquisition strategy that you have been successful within your experience. So I think you gave a light example of
Yeah.
your
Yeah,
current
but
company.
there are definitely some more that I want to
Yeah,
share
yeah, yeah,
with the folks listening in on the
yeah.
podcast here today. I would say that one of the critical ones that I've identified that I think is really important and helps to differentiate Progress as an acquirer of choice
Mhm,
is that aspect of trust that I talked about before. And
mhm.
that aspect of trust comes from early interaction, CEO to CEO. Like when I'm talking about doing a deal with a company, it's great. But when I bring my CEO in to talk to the CEO,
Mhm.
one, they know that we're really serious about doing an
Yeah,
acquisition, and two, it gives them an opportunity to hear directly from the leader of the company and ask the leader of the company questions that are on the top of their mind. So building that trust CEO to CEO is something that I have found to be really, really important. And it helps to differentiate us, particularly in a competitive process where, you know, there might be 2 or 3 parties digging in.
yeah,
Hey, if the CEO really thinks highly of my CEO, that could be the differentiator in us getting a deal done versus not getting a deal done.
mhm,
I would say the other key piece there as you build trust and build those relationships is really getting to have a dialogue with the key principals. What I mean by that is not just having a dialogue with the CEO,
yeah,
but having a dialogue with the key investors, the key
mhm,
owners, and the key
mhm,
decision makers in that deal. We
yeah,
have we got burned, I would say, on a couple of transactions early in my time here at Progress because in competitive situations where we relied on the banker and
mhm,
we didn't have that interaction with the key principal stakeholders,
mhm,
and that hurt us. So now in every deal that we do, I'm I'm developing a relationship with that key principal stakeholder as well, and I think that that is absolutely essential because if you don't do that, then maybe that key principal stakeholder is buddy buddy with another
Invest.
company's principal stakeholder that's
Yeah.
also bidding on that deal. Well, if they're playing golf every Sunday together, there's a high likelihood that they're going to win that deal versus me, who I
Right.
haven't had any interaction with the key principal.
Right.
So
Right.
I think that's something that's really, really important, something that we've really instituted here as part of our process.
Mhm,
The other piece that I would highlight is, you know, in the past, it was all about price. Who's
mhm.
got the highest valuation? And that person with the highest valuation is going to win.
Yeah.
That isn't the case anymore. You know, speed and certainty to close
Mhm,
are equally important, if not more important, in many of the deals that we look at. And when I talk about speed, what I really mean is how effective are we at running a diligence process? Is this going to linger for a
mhm,
month, 2 months with us just asking questions and then asking follow-up questions? We're incredibly focused in our diligence process on what we refer to as the P1s, the priority ones,
mhm,
the absolutely critical things that we need to get
mhm,
that help us get to a go no go decision quickly.
mhm.
You know,
Right.
all the other stuff that you ask for is nice to have. Maybe it helps you with the integration planning. Maybe you can get it later,
Right.
but it's not going to allow. If you're asking for all that, you know, the seller's going to get concerned that this process is just going to drag on. So it's
Mhm,
really important to focus on speed, and I think we've done a really good job at Progress putting a big emphasis on having very disciplined requests for each of our different functional areas,
Mhm.
so that they can see that we're serious and we're going to move fast through a diligence process. And then certainty to close. Certainty to close is interesting, and certainty to close runs multiple gamuts. On the one hand, certainty to close, are you sufficiently capitalized so you can close that deal, or do you have to go out and get financing to do that deal? We've lost deals in the past because we didn't have sufficient capital on the balance sheet, and we had to go out and get funding. And the other party was fully capitalized, was backstopped by its PE owner. They're going to win. So, it's absolutely essential that you have the cash on the balance sheet to be able to do a deal and not have to have that dependency. But in addition, when it comes to certainty to close, it's really important that, from a negotiation standpoint, you can show that you are able to be flexible.
Right.
Rep and warranty insurance is basically table stakes at this point.
Yeah.
And so, getting comfortable with using rep and warranty insurance as part of a transaction is key. But the other thing too is, I think, what was precedent in deals, say 5-10 years ago, is no longer precedent today, is no longer market today. So, if a seller goes and looks at progress filings from 5-10 years ago, they might be like, oh my God, we'll never get a deal done with these guys. But having flexibility and being able to recognize what is market today and being comfortable with what is market today versus what is precedent 5-10 years ago is really important, and gives that certainty to close assurance that I think is absolutely essential when you're doing a deal. So I would say, speed, certainty to close, building those relationships, building that trust, having transparency are all keys that, from an acquisition strategy standpoint, have allowed us to be successful in executing on some of our most recent deals.
Right. Fair enough. I think these are a very important point, and surely good for audience to know, because these are the real experiences, and
Absolutely.
they're very useful. So I have my next question to you. How can we create synergy between an acquisition strategy blueprint and acquisition integration blueprint? So I think synergy, always we talk about, synergy is good looks in paper, but when you really, if you go and track them and see the end results, they are not same. So what should be the integration strategy versus synergy? What do you think?
Yeah, so I would say, one of the things that's really important for me, and something that I have put a big emphasis on from my early days at Akamai through LogMeIn and into Progress, is the importance of, having a dedicated integration person, and having that dedicated integration person basically attached at the hip with me, from the point that we sign an IOI or an LOI, and we're in full-fledged diligence, because I need them sort of understanding what was our acquisition thesis, what was that strategy, and what does that mean from an integration strategy and integration blueprint standpoint, so that we can make sure that we can successfully execute on that original thesis. And so, my integration lead is sitting at the table. She's involved in every one of our diligence readouts. She is spending time with each of the functional leaders and really thinking about what is most critical from an integration planning standpoint, so that we can have as seamless a transition from them being a standalone company to being a part of Progress as possible, and making sure that that aligns nicely with what it is that we have in our acquisition thesis. And your point on the synergy piece is a great one. If we're establishing certain targets, like we're saying we're going to get operational efficiencies of X, it's really critical that she has a plan on the integration side that helps us to make sure we achieve that that operational efficiency of X. And it's interesting. I was at a recent board meeting, and I was presenting a slide that talked about the success of our three most recent acquisitions compared to our original acquisition model, and it was all green. I mean, and that is a testament to, taking a very, very strong concerted focus on the integration side and making sure that you can execute on that. And I would say that it was funny because the board was like, well, historically there may have been a little bit more red based on some of the deals before you came, Jeremy, but this is fantastic. And so, that is something that I put a huge emphasis on right from the get-go. And I have a rock star here at Progress. I've worked with rock stars at LogMeIn and at Akamai, and I've been lucky. And I think as a result of that, we have a much greater success rate with our acquisitions than, if you're dependent on a project manager internally who has no idea what it means to do an integration of an acquisition.
Right. most of the time I have seen, integration manager is somebody who could be a global project manager. We try to bring him and give him something.
Right,
This
right, right. But they don't understand. They don't understand the intricacies, the
Right.
sensitivities of a deal. They don't understand like how important it is for that company to feel like they're a part of us right from the get-go. Having access to email and other systems, understanding what the benefits are, having access to IT,
Yeah.
knowing what the different systems are going to be on a go-forward basis. There's so many different pieces, and
Right.
and yeah, you bring someone in cold who's a good project manager. They're not going to understand all the intricacies that go into it. So I'm a huge advocate. If you're going to make a hire, hire it on your corp dev team. Make sure you get someone who has a lot of experience doing deals. The person that I worked with at LogMeIn had done over 80 integrations. I mean, there's nothing that they haven't seen.
Yeah.
And that has tremendous value.
Yeah, because that person will have, at least he know what not to do.
He or she will know what not to do. He or she will know how to address different issues and sensitive points.
Right.
And the other thing that I think is important when you think about that integration person, can't be sensitive to like personalities and feelings sometimes, because you're executing on a deal, and sometimes you're gonna have to push people, and sometimes they're gonna be frustrated, because remember, these functional leaders who are working on this deal, they have a day job as well. So this is my day job. So
So I think I have seen always this lots of push-pull because all these functional guys are on part-time, right? Many times they don't have time to complete certain activity, and this guy have to get things done. So whole of his time goes on chasing people to know exactly what is happening, right?
Yeah.
So that's why having somebody, integration manager who have done, prior deal experience, and he have done in integration project, he will be the always best choice for such a role within the company. So I think company have been, now I see that lots of people generally join who have prior integration experience to be integration. So now I have another question, and that is the last question I want to put it here, because I know this topic is you can keep talking for a day about your experience and the way you have done. So my last question is, can you identify the activity to be covered in framing the acquisition plan? So I think very high level, if you can give some idea exactly how.
It's interesting. For progress, the acquisition plan is an absolutely critical part of our overall strategy. Our organic growth is low single digits. The company has been around for 40 years, public on the NASDAQ for 30. And so how we drive growth is through acquisitions. And so that is at the highest level how we drive our acquisition plan. I think for us, progress really strong. My CEO likes to refer to us as an incredibly resilient company. We have an incredibly loyal customer base, over 100,000 enterprise customers, over 1,700 ISVs that are integrating our technology, over 3.5 million developers. So a really amazingly strong platform to build off. But for us, when we're doing acquisitions, we're not like one of these high-flying companies that can go out and pay 15, 20, 25 times revenue multiples for assets. We just can't. We don't trade that way. And so we have really built a plan around being an incredibly disciplined acquirer. And what that means is having really strong financial criteria that we adhere to when we're looking at different assets, when we're thinking about who we can acquire. The nice thing about progress and playing basically across the entire software development lifecycle is it allows me to cast a very wide net with regards to what it is that I look for from an acquisition standpoint. But progress is not doing tuck-in acquisitions. We're only doing acquisitions that have scale, that can make an immediate impact on that top line. I can do tuck-in acquisitions that aren't going to impact my revenue for 3 years, but if I'm trying to be $1 billion software company in the next 3 to 5 years, it's not going to help me move the meter. So I am looking at assets that have scale. 20 million in revenue, upwards of 100 million in revenue is really where we focus. but I'm also looking for assets that, have certain criteria, because if an asset is growing 30, 40, 50%, the multiple expectation they're going to have is typically something that I can't afford. So I'm very focused from a financial standpoint on what it is I'm looking for. I'm looking for assets that are growing, sub 15, sub 20%, because they're going to be more practical from a valuation standpoint. I'm also looking for customers that have similar profile to Progress, high recurring revenue streams, highly sticky customer base, strong net retention, strong gross retention rates. And so that all goes into sort of developing this acquisition plan for Progress. And then, we spend a lot of time with our business unit GMs, identifying different themes and identifying different areas that could be interesting for their respective businesses. And then we go out and we go out and see who's in the ecosystem, who are the players there, and we build those relationships with those players. And then, when it comes to prioritizing opportunities, it's pretty simple for Progress. And we're going to prioritize those opportunities that fit best within that financial criteria, because the strategic rationale will fall out of that. Because we play across the entire software development lifecycle, most assets that are within that have some strategic relevance to Progress in one way or another, whether they're an interesting adjacency, whether they give us more strength in a certain area. So that part's not difficult. The part that we need to make sure we adhere to is the financial piece, because the last thing that I want to do as an acquirer here is go out and pay 10 times revenue multiple for some asset that's growing 30%, because the street's all our investors are going to scratch their head and say, that's totally counter to what they're saying they're going to do. So we stick very, very tightly to our criteria, where we focus, and what our universe is of the types of acquisitions that we can go after. And we've had good success. And I think that, in this current market environment where, private companies are starting to see a little bit of that contraction from evaluation that, public companies have, we think there's going to be opportunities for even more great potential acquisition targets for us. And, we are super well capitalized. I mean, we have over 500 million on the balance sheet ready to deploy for acquisitions. So we have the capital, we can move fast, we've shown the flexibility. And so then we just go out and execute on it. And so really that is how we sort of build up our acquisition plan or our M&A corporate development strategy. And it's been effective. And it was effective even in the last couple of years when companies had irrational views of value. We were able to find good assets and be disciplined, and we'll continue to execute on that.
Yeah, so I think one thing I liked about your energy, Jeremy, you are in corporate development team. I think energy is very important. The way you have explained your experience and how you have really planned, your next acquisition. I think this is very key, because your strategic intent should be very clear why you are acquiring, what is the purpose of short-term and long-term goal. I think these are key. And I'm sure that there are several points you spoke about. All my questions you answered. I like to thank for your time and your expertise which you share. I'm sure that our listener will able to use many of your points, and they can reach out to you for additional information. And I will come back to you. I'll come back to you again for another topic which is related to this, but we'll go more deeper and we discuss about your expertise and try to learn more about how we have achieved those.
That sounds great, Dharmendra, and I would love that. I love talking about this. I am passionate. I mean, having done this for 22 years and counting, I've lost a few hairs along the way, but but hey, that's okay. It's a lot of fun, and we're making an impact on the company, and that makes me proud. And I appreciate all the great questions and being able to spend some time with you and MergerWare, and look forward to follow-up podcasts on other interesting topics as well. So thank you.
Yeah, thank you. Thanks.
Bye.
Bye.